Hey guys, so there's this Super Bowl coming up, and according to the Wall Street Journal, Elon Musk apparently has asked the Twitter staff to basically do whatever they can to sell advertising for the Super Bowl. In the past, the Super Bowl has been a really big weekend. Saturday, Sunday, and Monday for the advertisers on Twitter, and so apparently in an email, the company is offering basically $250,000 in free ad space to advertisers that spend at least $250,000 on the platform. So it's more like buy one, get one free deal. And it's interesting because obviously, we all know that after Elon took over Twitter, there were a lot of brands that were very uncertain about the future of Twitter. And there's been a lot of a pullback from advertising on Twitter. Some of that might have been because of macros, some of that may have been because of the uncertainty involved in potentially advertising on Musk's platform. Everyone in the mainstream media predicted at that time that Twitter was going to implode. Of course, since then, Elon Musk has laid off somewhere around over 60% of the company. Approximately 2,500 individuals left off the company, so that's actually closer to 67% of people gone over. Now at Twitter, Elon has asked all his employees to list what they had accomplished in January and what other additional issues that they're working on, trying to solve, or recommendations they have for the company going forward. Now that's interesting. Now, going back to the Wall Street Journal, which is suggesting that Twitter is ramping up their Super Bowl pitches to advertisers offering a last-minute deal on one of the most high-profile big-game ad packages. According to an email viewed by the Wall Street Journal, it's also telling advertisers that the number of conversations on the platform about the Super Bowl, and you know that's not bad, whatever they got to do to encourage people to come back and support Twitter probably, especially since at one point, there were suggestions that up to 70% of advertisers had left Twitter, and by another measure up to 90% of a reduction was noticed in regular traffic to the advertising domain that Twitter uses, implying that potentially 90% fewer ads were actually being signed up for in November and December. Now, since basically Elon Musk used Tesla stock as his piggy bank to finance the purchase of Twitter, but you do have some good news today for Twitter and Tesla, and that's the win by Elon Musk and Tesla and the 420 funding secured lawsuit, where now they have removed potentially up to $6 to $12 billion of liability that would have been a big issue, as Elon had to save Twitter from bankruptcy while also fulfilling his essential roles at Tesla and SpaceX. Now, Elon says that Twitter still has challenges, but it's now trending to break even and public support is much appreciated. So, in other words, not yet saved, not yet clearly in the black, but things are trending towards a better direction than they previously were. Now, was this worse than 2008 or production hell for Musk? 2008 was the beginning of essentially the launch of manufacturing for Teslas via the Roadster, while at the same time being stuck in essentially the recession, so funding becomes extremely challenging. 2018 represented the production hell of ramping the Model 3, while at the same time Elon Musk was dealing with SEC inquiries over his funding-secured tweets. So far, Elon Musk did sell about $24 billion of Tesla stock in 2022. Now, Twitter is talking about potentially charging up to $1,000 a month for verification for businesses. This is because now Elon Musk is allowing companies to get this sort of gold check mark like the Wall Street Journal has. This gold check mark is quite different from sort of the regular blue check mark, which you could either buy or you get because you're maybe notable or not. This is a legacy verified account. The other thing that's interesting, what they've done now on Twitter is, they've allowed companies to create this orange check mark for businesses, and then you could get a sort of a little like T if you work for Tesla next to it, and so you kind of get double verified, so you can get a verification. You can get a business badge as well. And the neat thing about the business badge is you can click on the business badge and it actually links back to that corporate, verifying the corporate Twitter page. So individuals can now get a little bit more transparency rather than just somebody's bio being updated saying that they work for a certain company. And the idea there is in part to provide more transparency, which we know Elon's a fan of. So, to some degree, actually being able to verify that somebody actually works for the business they say they work for, as well as being potentially a verified individual, are some of the strategies Twitter is working on to not only provide more transparency, but also increase revenue. These are pretty neat and innovative things that we haven't actually seen Twitter change that much until Elon came around. Now, we have view counts with at least some potential reduction in spam, although there's still plenty of spam obviously. The blue check mark changed, the orange check mark changed, the employee verification changes, so there are changes happening. A company is somehow operating with 67% less staff, and so far, Twitter hasn't gone down. So good job, Elon. Mainstream media must be a little upset about that because they were pretty convinced this was going to implode. But anyway, several brands are thinking about returning to the platform, thanks in part to the Super Bowl and cheaper ad rates, as well as the release of a new tool look at that already getting new advertising tools. It's pretty smart release of a new tool that allows advertisers to create a list of up to 1,000 keywords and avoid having their ads appear above or below tweets containing those words. So, in other words, you can now create negative keywords, which is something that Google advertising platform has let you do for quite a while. But apparently Twitter says not, so thanks for catching up. This is good anyway. Beverage company and a financial services firm interviewed by the Wall Street Journal recently began advertising again. Apparently in January, the company offered free ad space on promoted tweet campaigns to get people to come back. Apparently on Super Bowl weekend, which is you do the prep advertising on Saturday and then of course big game day advertising on Sunday, and you do sort of the highlight advertising on Monday. Many advertisers, including Pfizer, United Airlines, General Motors, have paused spending on Twitter since Elon Musk took over in October. Now, Pfizer still advertises on things like YouTube and other platforms, and when Project Veritas does a video critically or potentially even going as far as exposing Pfizer on certain topics, those videos from Project Veritas get removed from places like YouTube, but they get to stay on places like Twitter. And now Pfizer isn't advertising on Twitter? This gets interesting. Now, many companies are seeing their ad revenue decline, even Google. In fact, Google's YouTube declined now for 2 quarters in a row, which is a little bit shocking. This was the last or the second to last report ending September. We saw YouTube was down 1.85 from a year ago, and that same thing was seen in the last earnings report from Google. And we saw the same kind of decline at Google for Google Ads, which are actually down now 7.8. So you've seen an acceleration from first of all strong growth to then negative growth, and now a lot of negative growth. So things got even worse in the quarter ending in December for advertisers. Also, American Express and their earnings call warned that advertising spending was declining at small businesses. Now, the commercial services and spending by U.S. small and medium-sized enterprise costs customers represents the majority of commercial services. However, that segment was the slowest growing customer segment, and small business enterprises have recently started to slow down spending in certain categories like digital advertising, implying that Q4 was really a little bit of a larger headwind for a lot of advertising companies, probably frankly why you had Elon in November and December essentially complaining. So it is clear that even through the advertising challenges that the entire advertising space is seeing, whether it's a TV or potentially connected TV, we'll see what happens when we get Trade Desk numbers. Advertising challenges at Netflix and low take rates on those ads at the same time as all of this sort of pain is happening in the ad space. It actually looks like you've got Elon Musk getting the company to at least trend towards profitability, and he says that he does not need to sell any Tesla stock in 2023. Now, that is what he says. What he does could be different. Now, if he would have lost the lawsuit, he would have been right back to unfortunately having sold. So fortunately, that lawsuit overhang is gone, and he says he might not even have to sell any stock in 2024, and maybe he doesn't have to sell until 2025. Though that is a less of a guarantee as more time goes on, so we'll see. But paying attention to Twitter as a Tesla investor, it's a surprisingly important endeavor. So that's it for today, guys. If you found this video informative, hit the like button. Thank you for watching, and see you guys soon.